This is the Tan Talk Radio Network.
The opinions, thoughts, and observations on the IRS Solution Attorney radio show are not legal advice. Facts and circumstances differ in every case. Do not take anything said on the show as legal or accounting advice. Always consult your lawyer or accountant before deciding how to handle any legal issue.
Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Hello, hello, hello. This is the IRS Solution Attorney, Darrin T. Mish, and I'm here again today, this week, with my lovely and talented co-host, Katrina Madewell. How you doing, Katrina?
That's me. Doing good. Welcome back, everyone.
So today we're going to be talking about something that is near and dear to most taxpayers' hearts, and that is, why in the world are there so many IRS penalties? Why are they so high? Why do I get whacked with them all, every year or so often? And what, if anything, can be done about them? So that's going to be a little bit of the topic today.
I think this week's show, most people can relate to, right? Like filing late. Like, I don't know anybody that hasn't filed a tax return late at least once, especially if you're self-employed.
If you're self-employed,
you might file late every year.
You probably have the opposite issue where you once filed on time.
I can't relate to that one. Not at all. Not me.
Yeah, before I started doing IRS problem resolution work, I used to file late more often than I'd like to admit. There's a bunch of filing deadlines, and we kind of forget about them. So let's go over those just real quick. If you're...
it's in your face, so hopefully you don't forget, because you see it every day.
Yeah, for sure. Well, just the other day was an extended deadline. But there's a March 15th deadline for corporations to file their returns. And before I started doing this work, I used to kind of forget that one quite a bit because, it's a month earlier. And the reason that March 15th deadline exists is so that you can get the K-1s and stuff out to the people who have to file by April 15th. So you need to either file your corporate return by March 15th or request an extension by then. And if you do get an extension, then those returns are actually due September 15th, which is what I was referring to just this week.
And then there's another extension you can get for that, right? Like October?
No, you're done.
No?
You're done late on the extensions. It used to be for your personal tax return, that your 1040, it was due on April the 15th, and you could get an extension, and I think it got you till August 15th. And then you could request another one if you could demonstrate a need, and that got you till October the 15th. But over the last several years, I want to say the last decade, they just skipped the August 15th extension. And if you file a personal extension by April the 15th, then you get an automatic extension till October the 15th.
I find for me, it's better just to turn that stuff over. Like, I've got to a place where I'm like, yeah, I'm not the right person to do this, especially with different personality styles. Hire a bookkeeper for $10 an hour. Let them do it. Let your accountant be... remind you of those deadlines.
I didn't prompt you to say get a bookkeeper. We just added bookkeeping and monthly accounting to the practice. So
I love that.
It's something that I've wanted to add for many, many years. And I just hired a new accountant in my office who is very, very exceptionally qualified, master's in taxation and MBA in accounting. And we were discussing it, and we're going to be offering monthly accounting and bookkeeping. It's something that small business owners just they can't get it done.
It's the C personality on the disc. So most of us are not that. I know I'm not. I'm like all DI. So I'd rather than to go through numbers.
Damaging commission time for me, okay?
Yeah.
I'm not that person.
There's so many better things I can do with my time than to look at numbers. And there's bean counters that love it.
Well, yeah, it's funny. You'd think, well, Darrin's a tax attorney and he deals with the IRS all the time. He must be really number-centric. And that's actually not true about my personality. I'm very solution-centric. I want to solve problems. I want to help people. I just do it the way I'm good at this is because I know the rules, the administrative rules that the IRS has to follow better than they do. And so I use my old criminal defense attorney background to go ahead and out-manipulate them. Not in a non-adversarial kind of way. But we actually leave the bookkeeping, accounting, and tax return preparation to people in my business that are actually better qualified and better suited personality-wise than I am.
Right. Well, that's what they do. They're good at it. If you like to do that, you're going to be good at it with any career. What are you guys charging for bookkeeping and accounting services? Did you figure that out yet? Because I know it's new.
Well, I think we ought to just have people call the office. It's really affordable. It's going to kind of vary depending on the size of the business.
I mean, if you have 1 or 2 employees versus 200, that's obviously going to be a lot more transactions.
Right. That 200 employee business, that's a full-time job for somebody. We can handle it, but it's not going to be a few $100. But
go ahead and give out your office call-in numbers and your website so people know how to get that info.
Sure. The website is getirshelp.com. Our office number is 888-GET-MISH. That's 888-438-6474. And actually, we'd really appreciate some questions today here at the station live. We're doing this live today, and that's 727-441-3000. 727-441-3000. So if you have questions about IRS problems, not so much tax preparation kind of questions, but if you have IRS problem kind of questions, then by all means give us a call, 727-441-3000.
And issue a letter.
Exactly. And you don't even have to give us your real name. We can just talk about it.
The scenario in general.
In a hypothetical. I have a friend who owes the IRS money kind of thing. But,
gotcha. So there, you guys outlined some pretty cool 8 points on different penalties that people can face if they file late.
Yeah, so if you don't file by your filing deadline that we just talked about, you may face a failure to file penalty. If you don't pay by the due date, you could face a failure to pay penalty.
So that's 2 different penalties.
Yeah, there's actually over 150 different penalties that the IRS can impose against taxpayers. I mean, let that sink in. 150 different penalties. And there's actually software out there where you can compute the penalty with 100% accuracy. And there's actually a little known provision in the code that says that if the IRS uses an inappropriate penalty, the taxpayer can basically calculate the correct kind of penalty, and you can ask them to abate the penalty, the wrong penalty, and impose
and
the
abate for lay terms.
Abate means eliminate or
get rid of.
Yeah, get rid of. That's a good way to look at it. So, if you don't file by the deadline, you could be facing a couple different penalties. The failure to file penalty is generally more common than the failure to pay penalty. So if you can't pay all the taxes that you owe, you should still file your tax return on time and pay as much as you can. Then you can explore other payment options. It's really important to note, we're responsible for the payment of our taxes by April 15th of the due date year, 16th or 17th, whatever it happens to be that year. But we're responsible for the full payment of our taxes on that date. So it's not like a lot of people think, well, I'll just pay my taxes by the extension deadline, October 15th. Well, no, it doesn't really work like that. You're supposed to have it all paid by the 15th of April.
So if you have to file an extension for your regular tax return, you're actually going to pay a penalty because you owed money?
Yeah, there's actually a safe harbor provision, and that says that if you pay 90% of the tax that you owe for that year, then you're not going to have, a late payment penalty. So it's
a neat little tidbit.
So if you owed, let's just use round numbers because I can get my head wrapped around round numbers. If you owed $10,000, if you paid $9,000 by April 15th, you wouldn't have a late payment penalty on that remaining balance of $1,000. So if you think you're going to,
as long as they have most of it, they're okay.
Exactly. So if you think you're going to owe a substantial amount of money and you just don't know what that is, then you should send a big check to the IRS to try to cover at least 90% of it if you can. If you can't, well, then there's nothing you can do about it anyway. You're going to have penalties to deal with.
So how does that work if you don't actually have a return that's accompanying that check that you're trying to send for the money you owe?
Oh, good question. So,
see, I think about all these random things.
Yeah.
Because I don't have the IRS head.
Well, that's why you're here, actually, because I don't know what's interesting, because I deal with this all the time. But if you file the extension, that Form 4868, which is the extension for the 1040, there's a place on there that asks you, well, how much tax do you think you're going to owe? And there's also, conveniently, very nicely, there's a line on there where you can put down how much you're paying with the extension. It's very common. I've seen that. Very uncommon. I've seen that very few times where people actually send a lot of money with their return, but some people do, and I think that's a good thing.
No problems ever getting that money back if it's too much?
Well,
I can imagine that would be a fight, wouldn't it?
No, because it's just a refund. It's just standard refund, just like any other tax refund. The problem getting it back.
Well, the government's broke, The
problem.
Just saying.
The problem getting it back.
That's really why I'm here, to lighten the mood.
The problem getting it back could be if you owed significant taxes for other years, older years, that are going to take that refund.
Oh, of course.
And capture it, to help you, pay off your older.
Well, that's any creditor. If you owe somebody money and you have a bank account in their bank, they're going to swoop it to take their money you owe them.
Yeah. So let's talk about the late filing penalty. It's typically 5% of the unpaid taxes for each month or part of a month that the return is late. It cannot exceed 25% of your unpaid taxes. So let's think about this for a second, okay? You don't get an extension, and you file and pay on April the 16th, 1 day late, which is a portion of a month, right? You're going to be paying 5% of the unpaid taxes for that month. So if your unpaid taxes were $1,000, let's just say $1,000 total, then you're going to be paying $50, for that 1 day.
Ouch.
Right. So
that hurts.
It gets pretty significant.
That's like dinner for two.
Well, depends on where you eat, right?
Where you eat, but you don't have to cook.
If you're eating at McDonald's, it could be dinner.
I don't know about McDonald's.
It could be dinner for like 6.
Yeah, maybe. I don't know. McDonald's has gotten expensive these days.
Maybe with a couple apple pies or ice cream cones at the end. But yeah, it's a significant number. And so when you get into these really big numbers, where you owe $100,000 in tax for that year or whatnot, and you file 1 day late, yeah, it can be pretty significant. But again, that penalty caps out at 25%. But still, 25% penalty is pretty extortionate, don't you think?
I think it's huge.
So on $100,000,
they're already taxing us at a really high rate.
It gets worse. It gets worse. So if you owed $100,000 and it capped out at 25%, that's $25,000. So now instead of $100,000, you owe $125,000. But keep in mind that interest is accruing daily, not monthly, daily, and it's accruing on itself. So right now, it's
at what percent again?
Well, right now it seems very low. It's 3%, but it's compounding daily.
Yeah.
So it's effectively much higher than 3%. So by the time you add in the 3% plus the 5% plus interest on yesterday's interest and penalties, it's pretty significant. Our rule of thumb:
compound interest can either make you rich or make you broke.
Yeah, exactly.
It's not a whole lot of in between.
So when I typically see taxpayers. Maybe the tax, let's say they hadn't filed in 6 years, the tax would be maybe $50,000 and the interest and penalties would be like another $50,000. So
in 5 years?
Yeah, it typically doubles. It depends. But yeah, typically when we look at the penalties and the interest, it will be doubled over the life of the problem. So
if it's you had put a note on here, if it's more than 60 days after the due date.
The minimum payment or the minimum penalty is the smaller of $135 or 100% of the unpaid tax. Ouch. So it's kind of a funny one. I don't know exactly who thought these up.
So the penalty is equal to the tax. Did I hear that right?
Right. The minimum penalty is either $135 or 100% of the unpaid tax. So if the unpaid tax was $60, it could be effectively $60.
Gotcha.
Does that make sense?
I'm surprised they put minimums on there, really.
Yeah. So it's the system is designed to. I don't think the system was ever intended for penalties to generate revenue for the Treasury. It's not. The penalties are not supposed to be there as revenue generators, but
they just need it to run divisions of the country. I really don't know why they need it, but they need it.
It's just like anything else. Any other money that goes into the general fund of the Treasury, it just gets used and spent. I mean, we spend more money every year than we take in. So
yeah, that's a problem.
Unfortunately, these punitive penalties that the IRS imposes against taxpayers have become expected, and so
it's
that's
like the bank that's a revenue stream for the penalties, the lates, and
So that's why it's very
150
uncommon.
Penalties is crazy.
Yeah, and I can't name all 150.
I don't. Wow, I don't even know where you would begin with that.
Exactly. So let's talk about let's talk about filing extensions real quick. It's really important that you file an extension if you think there's any chance at all that you're going to be late. There is no penalty for filing an extension. So if you file, let's say you file an extension and you actually get your return in by April the 15th, there's no penalty. There's no problem with that. It's absolutely fine.
Just the CYA.
So I think it would be a really good practice if you think you might possibly need extra time to just go ahead and file an extension automatically. And most tax preparers can file those by e-file for you. I would recommend that you not assume that your tax preparer is going to file an extension for you. Most don't automatically file an extension for you. So you're going to want to check with them to make sure that they do it. I have a short, funny little story about me in an extension one year. I actually filed the extension by mail. It was back kind of before e-filing. And you don't want to just mail that extension in with what's a stamp cost now, 49 cents?
Something like that,
You don't want to send it in with just a regular stamp. You want to send it in certified mail. It's going to cost you like $6. And you're going to want to retain that green slip that shows the proof of the date of mailing. So one year I filed an extension on the 15th, and I sent it certified mail. I don't know, maybe 30, 40 days later, I get a letter back from the IRS saying the extension was late and the penalty was $500. And, $500 is a lot of money for something that's so innocent.
Yeah.
And so I made kind of a funny mistake. I called the IRS, which I knew that this was not going to be resolved with a phone call, but I called the IRS, and the lady informed me that it wasn't filed on time, blah, blah, blah. And she said very nastily, she says, I said, well, ma'am, I mailed it, and I have proof of mailing. I can prove that I mailed it on time. And she said, well, if you don't have the certified receipt, then we're not going to accept it. And I said, well, ma'am, that's great. As a matter of fact, I do have the certified receipt. Where do you want me to send it? So ultimately, I did send it. It saved me the $500. And think about that. It cost me $5 to mail it. So that's 100 years of, extension requests via mail that I saved myself with that one preemptive step. So if you're going to file your own extension, you want to go ahead and send it certified mail. And I would recommend that you not wait until April 15th, because every year we see those news stories. There's lines coming out of the Tampa airport at 11:30 at night.
Yeah.
There's 50 cars in line. Don't do that. Go ahead and just file it earlier in the cycle.
So what if you have like a metered and you took a picture of the stamp? Does that suffice, or it has to be certified?
No, it has to. You have to have proof of mailing. There's a couple different ways to prove mailing. There's actually a certificate of mailing you can get at the post office that I want to say it costs under $1.
Wow.
That probably would not work. Might. You can also do the certified mail. You don't have to do the return receipt, by the way, which adds another $3-4. You can just do the certified. The USPS tracking is pretty good nowadays. And you can send it registered, which costs even more than certified. And that's pretty much the only thing they're going to accept. The meter stamp is easy to change the date, so they're not going to be down with that.
Yeah, even though they get those machines like re-inspected and stuff. So I have a question. What if you have a person that's paying their taxes on time, and let's say they usually get a refund, but for whatever reason they don't file the return on time?
That's why you're here to ask these really insightful questions.
Because it happens, you know it does.
So it makes sense, right, that if
like you don't owe them any money.
If the penalty is calculated upon tax owed, then what's the penalty if you've got money coming back, right? Well, the good news is if you got a refund coming back, there ain't no penalty.
Yay!
Yeah, so that's really great. But there is a trap. There is a trap that we're going to talk about here in a little bit.
So they just penalize you on like failure to file on time, or is there they have to have some kind of penalty, don't they?
So the penalty for failure to file or failure to pay is based on tax owed.
Okay.
So if you, and this happens all the time, that if you've got even a $1 refund, if you file late but you didn't file an extension, there is no penalty because
find all those receipts.
It's incalculable. So what happens is there is sort of a penalty for the filing of a late refund return, and that would be if you don't file that return within 3 years, then you forfeit the refund.
Ouch.
It doesn't go to back taxes that you might owe. It doesn't go.
They just keep it. They're like, it's our little bonus.
Yeah, it just literally we get a letter that says your claim for refund has been denied because it's more than 3 years old. So here on the show, we talk about statute of limitations quite a bit, and that is actually called the refund statute of limitations. You only have 3 years. So you want to file those refunds, those refund returns within 3 years for sure. You're going to want to get certified to be a great way to file those late returns now if you're getting close. You want to be able to prove that you filed it on time so that you at least get credit for the refund.
So that would be April 15th from the preceding year. So we're in 2015. So it'd be safe to say that deadline is April 15th of 2016 for 2013? Is that right? Do I have it right?
Confusing me now.
So I want to make sure I have it right.
The deadline for 2012, it was supposed to be filed on April 15, 2013, plus 3 years would be April 15, 2016.
Okay. So even though you're filing the returns for that year, you sort of have that not quite 4 month, 3.5 month
Yeah.
wiggle room.
You got a little bit of extra love
because the
there.
date's April 15th.
Exactly. So our taxes aren't due on January 1 of the following year. They're due on April 15th of the following year. So, yeah, and I've seen a lot of cases like that. In fact, I'm handling a tax court case right now where it's for a lawyer. She's a very high income individual, but she's a litigator. She's always in trial or in depositions, flying all over the country and stuff. And what happened to her was life just got ahead of her. She just kind of lost track, and she didn't file for many years. Well, we got her caught up to date on her filings, but she had some refunds that were like
She missed out on
$19,000,
Ouch.
$20,000,
seriously buy a car with that.
really significant money. And she was a real sport about it, though. When I kind of broke the bad news, she was kind of like, "Well, okay, my bad, my fault for not taking care of this." So that's kind of hurts. As an attorney.
Bookkeeper. I'm just coming to loop back around to bookkeeper and accounting.
Yeah, she didn't even need a bookkeeper, really, because she was a wage earner. She was getting a W-2, having all that tax withheld from her check. Really, all she has...
personal assistant.
All she needed was to have a relationship with a tax preparer to, like, bug her a couple times, every year. Hey, we got to get your return done. We got to get your return done. You don't want to lose your big refund. So she actually owes some significant money on some later years where she, I forget what the issue was, but she generated maybe a $20,000 or $40,000 bill, and I mean it really stinks. Those refunds don't even.
They could have wiped it out.
Yeah, absolutely, and it was just it was about this enough to zero it out.
That has got to be painful. Seriously, that would be painful.
It's even painful as the lawyer to tell people that. It's not fun to give people bad news.
Well, for me, it's like, we've seen some crazy stuff in the market. So we definitely have those cases where maybe people were waiting to sell because they couldn't sell. They didn't have enough equity. And then when we do the numbers, we have to tell them, look, you have to write a check to sell your house. That happens. That's painful. We don't like to deliver that news either.
No, that'd be really bad. So let's talk about real quick about how do you get rid of these penalties. Well, we've talked about on the show before, and incidentally, you can find our older episodes on our podcast. The podcast is available on iTunes at IRS Problem Solver is the name of the podcast there, or the episodes are here on the WTAN website as well. But one of the things that you can do is if you're going to automatically qualify for what we call first-time penalty abatement if you've not paid significant penalties in the prior 3 years. So let's say this year you filed late, but the prior 3 years you're totally clean. Literally, you're eligible. You just have to contact the IRS, ask them for the first-time penalty abatement. They'll figure out if you're eligible or not. They'll go ahead and wipe out that penalty. Most people, that doesn't apply to. So the other way to eliminate penalties, or we're going to use that fancy word again, abate penalties, which means eliminate, is we're going to go ahead and ask for the abatement based on what's a concept called reasonable cause. Now,
so what is reasonable cause? I'm going to ask that question.
I'm so glad you asked. Reasonable cause means a darn good reason why you couldn't file or pay on time.
So what's a darn good reason? I'll throw myself under the bus. I told you my crazy story about my QuickBooks crashing, try to reinvent that.
Probably not good enough. Might be. Usually you got to think death, divorce, illness, substance abuse, chronic illness, gambling addiction that you were treated for, psychological issues that you were treated for, not the normal psychological issues that we all have where we just kind of freak out and break down. You got to be able to demonstrate that you proved it. And the other thing that's challenging about reasonable cause penalty abatement requests is that it's really hard to demonstrate reasonable cause over years and years. So if you're a non-filer for 6 years or something, or 10 years or 20 years, you're not going to be able to prove reasonable cause.
They see the pattern.
Yeah. I mean, there's just not a good enough reason that lapses for a decade. If you do request reasonable cause in those circumstances, you're sometimes going to get it for a year or two, and that's about it. But I think we're reaching the bottom
We're at the bottom of the hour. We're going to take that hard break in like 10 seconds. What's next after the break?
We're going to talk about some scary things that are going on in the news.
Back in a minute.
This is the Tan Talk Radio Network.
Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Ask me about an inside secret to save several hundreds of dollars on your annual homeowner's insurance premium. Text the word WIND, W-I-N-D, to 813-377-2775. Again, 813-377-2775. Hi, I'm Katrina Madewell, host of Tampa Home Talk. I'm going to give you market-appropriate, timely information regarding homeownership matters, because we want to make your everyday life better. Wherever you are in life, it's our mission to bring you good advice so you can maintain good credit, live within your means, and build wealth. My team and I are passionate about it. Love where you live, or I'll fix it. Tampa Home Talk on WTAN every Thursday and Saturday at 5 p.m.
This is the Tan Talk Radio Network.
Welcome back. You're listening to the IRS Solution Attorney Show, and I'm your co-host, Katrina Madewell.
And I'm the IRS Solution Attorney, Darrin Mish.
We are in studio today live. If you have some questions, we're at 727-441-3000. Again, those studio call-in lines, if you have that IRS hiccup just dinging you in the side, or you haven't filed your taxes and you have a general question, studio call-in line 727-441-3000. Again, 727-441-3000. Want to make sure you're safe.
I was going to ask you to say it again just for fun. But so let's talk about what happens if you just never get around to filing that return. What does you just get away with it, or does the IRS do something about it, or whatnot? And I wish the answer was you just got away with it and there was no consequences. But that's not the answer. What happens is if the IRS, if you don't file, a very high percentage of the time, the IRS will go ahead and file for you. And when they file a tax return for you, that's called a substitute for return. In the business that I'm in, we call that an SFR. And we have lots of acronyms like that. But
of course.
So they'll file a substitute for return. And so what's wrong with that? I mean, some people might think, hey, that's kind of cool. That's pretty convenient. They'll file my return for me. I don't have to pay H&R Block. I don't have to pay Darrin. I don't have to pay anybody. I don't have to do this myself. The IRS will just prepare a return. Well, it should not be a big surprise that when they prepare the return,
you're not going to have any deductions.
Yeah,
you're not going to have nothing.
Exactly. What they do is they take the 1099s or the W-2s. They multiply 100% of the income, basically, by the tax rate, generate a gigantic bill. They throw in there the failure to file penalty for however many years, and it's a big, fat, ugly number.
They're going to do something to get your attention, that's for sure.
Yeah.
So I have a question. You're talking about the substitute for return that the IRS files, but how does that fall into the stuff we've talked about on prior shows where if, I know you mentioned something about that 10-year statute of limitations where if you haven't filed, then it goes away and you don't owe that money. So how am I mixing those up? How does that work?
A little bit. It's a good question, though. I've been doing this long enough that it used to be that the prevailing opinion of the law was that a substitute for return had no statute of limitations for the collection. So when I first got into this business in the late 90s, if you had a substitute for return, we didn't tell you it ever expired because the IRS's position even was that it didn't have an assessment date, so it didn't have 10 years, so the clock never started to run. Fortunately, that's wrong. In about the mid-2000s, it came out, the IRS actually, to their credit, came out with an opinion that said that no, that's wrong. What we've been saying is wrong, has been wrong all along. There is an assessment date for a substitute for return, which makes sense. I mean, you can't.
It has to be a date it went in.
Right, it has to be, tax has to be assessed. The IRS, contrary to public opinion, can't just invent tax and start billing you. They have to go through a formal, what's called an assessment process. And, I won't belabor that point. But so now there is clearly a 10-year statute of limitations for the collection of a substitute for a return, just like there is with any other tax. One of the challenges comes up that it can often take 3, 4, 5 years for the IRS to prepare a substitute for return for you if you don't get around to filing your own. So
they're pretty much always going to do what you're saying, but it may take them a long time to get to it?
It takes them a really long time because, something like 10% of the population doesn't file. So the IRS has to get around to filing. In fact, when we look at their transcripts, what happens is we see a notation that a substitute for return is being generated, and sometimes it takes a year and a half from that notation that they're working on it to it actually being done, which is kind of funny. It's an illustration of the inefficiency of government. If I was running the IRS, there'd be a notation that a substitute for return was being worked on, and then like that same day, it'd be like, yep, big old bill, here you go. I mean, how hard is it? It's not that hard for them to do it.
And they're doing that based on the information they're getting from employers. So when the employers file, I forget what the forms are.
I'll use an example for you, okay? So your broker gives you a 1099 at the end of the year, and let's say I don't want to insult you. Let's say you made $200,000. Okay, gross. And so what the IRS will do is they'll just go ahead and multiply the tax rate on $200,000. They won't give you any of your business deductions. They'll give you a standard deduction for you, for one person, none of your kids, none of your itemized deduction.
Yeah.
And so
mileage, all the real stuff we have.
Right. None of those actual hard business expenses. And so the tax on that $200,000 is probably going to be like, 60 or 80 grand, and then penalties on top of that. And so
what about if they pay me like a corporation to corporation, or their corporation is paying LLC? Any difference?
Well, Congress tried to have a 1099 requirement on the payment of funds to corporations. That was, I believe, a 1099-K. And
I'm asking all you these funky questions.
Yeah, that rolled out with Obamacare, actually. And what happened was, once they realized the billions upon billions, or the hundreds of billions of payments that go back and forth between corporations, they actually realized they were not going to have the capacity to even process all these 1099s. And businesses were up in arms anyway. Like literally every time you pay somebody more than $600, you got to generate a 1099. Think in your business.
It's crazy.
Think in just your little business.
Oh, it's happened.
As a realtor, how many 1099-Ks you would have to issue in a given year? I mean, the accounting burden was just crazy. And the IRS is trying to get to that point where they know where every dollar in the economy goes.
It's hard though. I mean, there's a lot of cash businesses that you're just not going to follow.
Yeah, exactly. But with the computing power that we have today, there's no way for them to track or efficiently process 1099s that went from business to business or from consumer to business.
And they don't have the manpower to do it anyway.
No. And our computers just aren't up to snuff yet, to be able to calculate that. And I think that's a good thing. I mean, that would be pretty scary if they actually knew where every dollar flowed through the through the economy. I think that's.
I'm kind of glad they don't.
Yeah, I agree. And it's not because we're doing anything wrong. Absolutely not.
It's a what if they call it Big Brother theory?
Yeah, it's an invasion of privacy.
Yeah,
for sure.
Big time.
And if you ever thought about this, and I'm not attacking the IRS here, but have you ever thought about the way to control the population is not through the Army or the police? It's through the IRS. Now let me explain myself. The IRS doesn't need, or let's say in this dystopian world, okay, that I'm describing right now, like 1984 stuff. If the wrong kind of government got a hold of the IRS and used it in this evil way, they wouldn't need a gigantic police force of people, to drag people to jail. All they do is they just cut off the money. So if they were just trying to, and they're not doing this, okay, folks. I'm not saying they're doing this at all. But if a evil administration wanted to persecute its political enemies, all they would do is just levy the wages and bank accounts of all of their enemies, and they don't have to put you in jail. If they put you in jail, they have to feed you. If they just take all your money, They don't have to feed you, and they bring you to your knees immediately. I mean, we all have, families and bills and,
Yes.
obligations like that.
Nobody wants to not be able to go to the grocery store or the gas pump, like we talked about.
Exactly. So it's kind of a scary thought, and I try not to dwell on it too much, but that would be the way for an evil empire to take over the population or to control the population of the United States, is just cut off the money.
So while you're talking about that, let's hop into arrests. Like, can the IRS actually arrest you for not filing taxes or not paying penalties? Or, like, do they have that kind of governing over taxpayers?
That's a really common concern, and I have non-filers come into my office every week whose biggest concern is, am I going to go to jail? And to my detriment, okay, I'm criticizing myself a little bit here, I often sometimes forget to address that concern, even though it's their overarching concern, because it's so silly in most people's cases, okay? It is a crime to fail to file.
But it's legitimate.
Yeah, it's absolutely legitimate.
I mean, I'm sure a lot of people think that.
Yeah, most people do. And so it is a crime to fail to file. It is not necessarily a crime to file late.
So wait, what kind of crime is it if you don't file?
It's a federal misdemeanor to fail to file a tax return. It's a federal crime to file a false tax return. I mean, this just makes sense, right?
Okay, yeah.
If you file a false tax return, it's against the law. But if you file a return, and let's just say it's accurate, and you file a return and just don't or can't pay, that's not necessarily a crime. If you cannot pay, that is most certainly not a crime. If you can pay but choose not to, and you do shady, evasive things like, you owe $50,000 and you push $100,000 over here to put a house in someone else's name,
or
that
you
kind
just
of thing.
bought a yacht.
Yeah, that's tax evasion. That can be punishable by criminal charge. But generally speaking, the good, honest, normal people that I represent on a regular, daily basis who just don't have enough money to make ends meet, no, they're not going to be charged with a crime. If you think about how our system is set up, it's set up based on a concept called voluntary disclosure. And we've talked about this before. Mm-hmm. Voluntary disclosure does not mean that the filing of a tax return is a voluntary situation. It means that we voluntarily file, we voluntarily disclose our tax information to the government, and then the tax is assessed and we pay the tax. Okay? But this voluntary disclosure sort of situation, or this system, is predicated upon, trust to a certain degree, and it's predicated upon intimidation to a certain degree. So that's why we hear about these stories like celebrities that we're going to talk about a little bit later. These celebrities get prosecuted because the government simply does not have the resources to prosecute everybody who deserves it.
Well, I mean, they really don't want to prosecute the taxpayer anyway because it's a revenue stream for them.
Yeah, for sure. I mean, if they throw you in prison, then it costs them money.
Exactly.
And then they may assess a bunch of restitution or something in the back. But now that you're a federal felon or whatever, and you've been in prison, and you're not going to have a large ability to pay. So you're exactly right. I mean, the system is not designed to put you in jail, incarcerate you. It's designed to get you to file and pay your taxes. And that brings up an interesting point, and that is, let's say you're a non-filer and you haven't filed in 10 or 15 years. What the IRS wants you to do is file the last 6 years' returns, and then let's say you qualify for an offer in compromise, which is where you can make a deal to settle for less. The IRS will often take a smoking small amount of money to settle that offer in compromise case and settle those missing returns, because their prime motivation is not to collect that money. Everybody sort of gets that for a lot of people, they're not going to be able to pay that amount of money. The prime motivation for the IRS in that situation is they want to get that taxpayer back in the system so that they don't lose all that tax revenue for
future
the rest
years
of your life,
because they're afraid to file.
Yeah, exactly. So,
we got a great question on Twitter, and this is one that we get also. Mary was asking, my husband and I recently lost our house to foreclosure. How will that impact my taxes? We get this one a lot too. And even in a short sale where many times they may generate a 1099 for the loss in which shows up as income, right, a 1099, but the bank is counting that as a loss. So if you owe $200,000 and you sell it for $100,000, theoretically it's a $100,000 deficiency balance that maybe they didn't pursue, but they pop out this 1099.
Right. It's a 1099-C, stands for cancellation of debt, and only our Congress could invent a law that says that debt that you were forgiven, you have to pay tax on. I mean, this makes no sense whatsoever. But
the bank's writing that off, right, as a loss.
The bank is writing it off as a loss, and so the government's position is, well, if you were forgiven that $100,000, it's like you paying, like it's like somebody giving you $100,000 and then you paying it off, and so they want you to pay tax on that $100,000. Now the good news is there's some exceptions, right, for primary residences where there's a cancellation of debt, and there's a huge exception in the law that we use on a regular basis, and that is that if the taxpayer, there's a couple exceptions, but the one we like to use is if the taxpayer was insolvent at the time of the forgiveness of debt, then it's not taxable.
It's the 982C, isn't it?
Yeah.
Is that right?
I think it's a 982. I don't know.
Or something like that.
Yeah, I think it's a 982.
That was close for a non-IRS person.
Yeah, exactly.
So insolvent.
I don't think I could have named the form off the top of my head.
Insolvent, break that down. That means basically.
Insolvent basically means that you have more in obligations than you have
So you're
in
broke.
assets.
You're broke.
You're broke. But think about who loses their house. I mean,
Yes.
there are investors and stuff who make strategic decisions to walk away. Okay, we're not talking about those folks because they're not insolvent usually. The people we're talking about in this situation are...
A lot of people are.
Yeah.
I mean, I've got a case right now that was referred to me by another attorney here in the area, and the husband was the primary wage earner for many, many years. She's a teacher, doesn't make a lot, and her husband was a truck driver. So he has Parkinson's now, and he obviously can no longer drive. It's getting worse. He's starting to shake. So that would be a good example, wouldn't it?
Well, depending, if his assets exceeded their liabilities, then for sure.
Well, they don't have anything.
Yeah. So, they've got a $100,000 tax bill and they've got assets of $5, then, they're going to be insolvent, and that exception is going to fix that. Remember, though, and you can amend a tax return to take care of this situation, but remember, we're always talking about time limitations and whatnot on the show. There's a 3-year statute of limitations for the filing of an amended return, too. So you want to get that amended return in on time, so that you don't lose those kinds of changes. Because we see a lot of returns where maybe the person forgets to put the 1099-C on the return, and then the IRS picks it up, assesses a bunch of tax. Well, that's not right. I mean, you got to deal with it, but you only have a certain amount of time to deal with it.
What is that time frame? Do you know?
It's 3 years.
Okay. So Janice also had an email. She said, if I carry inventory in my business, do I need to file an accrual taxpayer, or can I do it on a cash basis business?
So this is a little bit of a head scratcher, but I thought about it, and no, I mean, you can be a cash basis taxpayer for purposes of preparing a tax return. Certainly, that's not a problem. It's just if you're going to follow GAAP accounting standards, generally accepted accounting principles, then your business, for purposes of your financial statements, you're going to be an accrual taxpayer, but for purposes of your tax return, you're going to be a cash basis taxpayer. What does all that mean? Let me try to summarize that in just a few minutes here.
And really, this is applying to someone that has inventory in their business.
Right.
That's what we're talking about.
So what it means is the difference, a cash basis taxpayer is you bring in cash, you put that on the books, you collect the cash, you put that on the books, you pay tax on that cash collected. An accrual basis taxpayer is the kind of person who invoices the person. So let's say they invoiced you for $100 and they book that invoice in almost like it's collected, and they have to pay tax on that. Now, if they only collect $75 of that $100, then they'll write off the $25 as bad debt, and they'll only pay tax on the $75. It's really just it's kind of the same end result. It's just a different way of getting to the same result.
Gotcha.
But most taxpayers by far are cash basis taxpayers. It's much less paperwork and whatnot. But that's why you always hear, especially from small business owners, hey, can I write off my bad debt? Well, yeah, but you don't get a tax deduction for that because you never collected the money.
Right. Don't forget, you guys can tweet out your questions. Darrin, DARRIN _Mish, MISH, like the fish, but with an M, like Mary, Mish. Buck from Facebook had a question. He said, our attorney and our accountant are both professional corporations. Do we still have to send them 1099 forms?
It's almost like we talked about this before. No, you don't have to send them 1099s, although some accountants will. But no, you don't have to send them 1099s because you're doing business with a corporation. It would be the same analysis of, do I have to send Walmart a 1099 at the end of the year?
Oh, gosh, that'd be a big one.
Yeah, I mean, I just picked a store, but yeah.
But that's a big one. Like, we host FPU in our office, and we hear that all the time, either Walmart or Target. People have, like, the, $900 bill for 1 month.
Yeah, because Walmart is now becoming, it's kind of like Amazon, right? I mean, if you looked at my combination of Amazon and Walmart, it's like 80% of all my discretionary income. It seems like it goes to one of those two places. It's either groceries or whatever. So, no, you don't have to issue a 1099 in that scenario because it's, consumer to business. So
Gotcha. Well, it's about that time.
It's time for this. So I did not plan this, but it worked out pretty well. The IRS Train Wreck of the Week concerns a dentist that I represented several years ago. I want to say it was maybe 10 or 15 years ago now. But this gentleman received a very large 1099-C for the cancellation of debt. And he didn't know what to do. And frankly, at that point in my career, I wasn't really sure I knew what to do either. But I knew that it didn't seem fair. And so after doing some research, I found the Form 982 that you talked about. I think it's 982. And,
I'm pretty sure it is.
And we realized that he had so much debt, he was actually kicked out of a Chapter 13 bankruptcy. So
wow.
Basically, this is a great story because it's...
So he was kicked out of the 13 for what? To go into 7?
No, he had like over $400,000 in debt, personal debt, and there's debt limits in a Chapter 13 so you can only owe up to, I think it's around $380 now.
Oh my gosh, I had no idea.
So he owed so much money that they actually booted him out of the 13 as ineligible. And
boom, the protection's gone. You don't even get it.
Yeah, so I wasn't quite sure how to win the case with the IRS necessarily. So I filled out the 982. I sent in a letter explaining that my guy was so broke they kicked him out of bankruptcy. And it's the only time in my career so far that I got an apology letter from the IRS. They wrote off all the money. It was over $100,000 that he owed them. And they actually sent a letter saying, "We're so sorry. We didn't mean to do that. And it's all fixed."
I would totally frame that. That's awesome.
I'm sure I should have kept it. I don't think I have it anymore. It's been so long, but...
So you were talking a little bit before the show about David Allen Coe pleading guilty to income tax evasion.
Yeah, so David Allen Coe is a country singer. He's kind of like old school outlaw country. And I'm actually a country fan. I listen to country music pretty much all the time. But Mr. Coe predates my involvement or enthusiasm for country music. So I was trying to listen to some of his songs today so that I could have a frame of reference, and they're all a little bit before my time. But Mr. Coe ran into some problems where he owes about $500,000 to the IRS dating back to as far back as 1993. And just recently, on September 14th, he pled guilty to one count of obstructing basically the due administration of the IRS. And he has not been sentenced yet in federal court, but he's looking at between 3 years in prison and up to a $250,000 fine. So, Mr. Coe has some significant problems ahead of him, I think. And the reason that the IRS prosecutes these celebrities, we talked about Wesley Snipes in the past,
yes,
and we're going to talk about Plaxico Burress here in a minute.
They want to make an example out of these guys.
They do it because, they prosecute David Allen Coe, and it ends up in the media. We're talking about it. Listeners, viewers of all different types of media, including newspapers, they read it. They think, oh, my goodness, if that guy got in trouble for that, maybe I ought to get straight. Maybe I ought to file my missing returns. Maybe I shouldn't cheat on my taxes, that kind of thing. And it's actually fairly brilliant. They're getting a lot of leverage out of a prosecution of a celebrity so that they keep us all in line.
Well, I think the general public, too, they think, well, if so-and-so couldn't pay their way out of it, then this must be real.
Yeah, it's sort of interesting. I don't know that much about Mr. Coe, like I said. And I guess he didn't file from 2008 to 2013, which kind of fits in the time frame that I'm always referencing, right? 6 or 7 years. But see, this is a high-profile notary, has a guy that has a lot of notoriety, and so he got prosecuted. They also seem to target, doctors, lawyers, politicians, judges, things like that. Things that are going to make a splash.
High-profile people.
Things are going to make a splash in the newspaper. If they prosecute somebody that's just a Joe Schmo, and
people think, oh, poor Joe,
and it doesn't make it into the newspaper, then they don't have the same degree of leverage that they do.
So Plaxico Burress, that's right on time because it's football season.
Yeah, so Plaxico, he doesn't play football anymore, does he? He was the receiver for...
I don't think so. I didn't see him on the fantasy draft list.
I think he played for the Jets and the Giants. Ed, our producer, is shaking his head like no. But this guy was also famous. Remember, he had a gun in a nightclub in New York City and shot himself in the leg. Remember
that's
that?
Right.
So old Plaxico.
That guy.
Yeah, it's kind of funny that incidentally, the reason he shot himself in the leg was because the weapon was not properly holstered. if it was properly holstered, then he could not have shot himself in the leg. He would not have been prosecuted for that. I don't ever condone carrying a gun, even by a licensed individual, into a bar.
Well, you're supposed to learn that in your in your class that you take. If that they serve a certain number of alcohol or percentage, you probably shouldn't carry a handgun in there.
So,
and in New York, I don't think it's allowed anyway.
No, handguns are essentially illegal in New York City. I mean, which is contrary to the Second Amendment. But we won't talk about that.
Exactly.
But Mr. Burris,
it's another whole show for another day.
Mr. Burris obviously has some life lessons that are still ahead of him. He's still a young man, but he's being prosecuted for tax evasion, or let's see, what is it here? Yeah, he's being.
He didn't pay $48,000 in state income taxes from 2003.
Okay, that's what it is. It's actually a state case. And it's about $48,000. Now let's think about $48,000 for a guy with that kind of profile. He obviously made
$500,000 a year, easy.
Yeah, he obviously made something like $500,000 that year. And I agree that even if you make $500,000, $48,000 is still a lot of money. But to be charged with a criminal offense and potentially go to prison, I mean, I don't get some people's judgment here, but.
I mean, I guess he's not working now, but still, why wouldn't they just levy some of his assets and sell it? I guess they could. They would, right? Why wouldn't they not do that as opposed to throwing him in jail?
Well, apparently he's being charged under New Jersey law, and I have no idea
well, you're
what
not
the rationale.
a New Jersey lawyer, but
yeah, I can't tell you what the rationale of New Jersey is in trying to prosecute him instead of just getting the money, other than what we've been talking about, right? Big splash. Want to make sure that everybody in New Jersey toes the line and pays their taxes. I mean, I guess he's the first person charged under this 2014 law that makes a bad electronics fund transfer a criminal offense. I don't even understand exactly what happened there.
I don't either.
But apparently,
I'd much rather be following football.
Yeah, exactly. Hey, by the way, I went 10-4 last week.
Ooh,
pretty happy with that.
So what about the IRS offshore account stuff? Because they're tightening up on that, right? Okay. Is that a change?
It is a change, and this is probably not going to apply to most people that hear this, but basically...
It's always that thing that everybody wants to know about, whether they do it or not, I think.
So we used to watch James Bond movies and stuff like that, right? And you'd hear about the rock iron or rock solid, privacy protection in Switzerland and stuff like that. You used to be able to open an account in Switzerland, and if you just had a number, if you had the right number...
A Swiss bank account.
Yeah, you could get all the money. Well, the IRS, after 9/11, actually really clamped down on this, and Americans who bank anywhere in the world basically have an obligation to report to the IRS the very existence of this offshore account. They have to file a form called an F-bar by June 30th of every year. If they don't file the F-bar, then there's potentially criminal sanctions and or very onerous penalties that can be imposed.
So we have to let them know if we have a bank account outside of the U.S.?
Now think about how this comes up. I mean, you can always think about those people that are really shady and trying to hide money and stuff, but what if you're an expat? You're an expat, you're an expatriate, you're living in Panama because it's cheap. You're going to have a Panamanian bank account because you need a debit card so you can buy, a soda at 7-Eleven or whatever. And so what happens is these relatively unsophisticated people that are expatriates, American expatriates in other countries, they just don't know that they have to file this F-bar form. And the penalties can be really crazy. I mean, the penalties can be up to 50% of all the money in the account for any given year. I mean,
wow.
This is nuts.
So that's just because they're American citizen and they're not letting the IRS know they have this offshore account.
Right, and this is what's leading actually to people, more and more people, usually wealthy people, who are renouncing their citizenship from the United States because America is one of the only countries in the entire world where we have an obligation to report and pay taxes on our worldwide income. That means if you go to Saudi Arabia and you earn $100,000, you have to report and pay taxes on your income, even if you earn it in Saudi Arabia, even if there's no U.S. source income whatsoever.
That part's kind of sad, but I guess, those global boundaries are closing a little bit with the internet the way it is.
Well, it's the government. It's the U.S. government wants their money.
Well, you're listening to the IRS Solution Attorney Show. If you miss any part of the show this week, you can catch it on getirshelp.com. It's also available over on a podcast. If you have any questions for Mr. Darrin Mish, you can call him at 888-GET-MISH, M-I-S-H, and we'll be here every week at 1 p.m.
Yep, that's it. We're going.
Same time, same place next week. This week, we're out.